So welcome back, traders. I'm going to be sharing with you the 3 time frames you need to be profitable in the forex market. The 3 most important time frame you need to take a trade. So let's get on with it. The first one is the 4-hour time frame. Most traders get into the habit of taking their trades on higher time frame. They use the daily or the weekly time frames to make their analysis, but there's nothing wrong about that. But the only problem there is we are intraday traders. Unless you are a swing trader, you hold your trades for overnight. Unless you hold your trade overnight or for weeks, there's nothing wrong with using the daily and the weekly time frame. But majority of traders are intraday traders. We do it part-time and we only trade for a few hours in a day. So using the daily and the weekly will be wrong for you to use that. But if you're, as I said, if you're a swing trader, you can use that. So as an intraday trader, the 3 time frame, the first time frame you need is the 4-hour time frame. The 4-hour time frame. So will you use the 4-hour time frame to determine the trend of the market for that day, or the volume, or to mark out our key levels. So we use the 4-hour time frame as an intraday trader to draw out our level, our key level, our support and resistance level in the market, and to also to determine the trend of the market for that day or that time period we want to take that trade. So here's an example on USD card. So we are currently on the 4-hour time frame. As you can see, the trend is down at this point, in lower high, lower low, lower high, lower lows. And at this point, the trend changed from being bearish to being bullish. Price start making higher high, higher lows, higher high, higher high. So we use the 4-hour to determine the trend of the market for that day. So this information is not really relevant for now, because we are just focusing on the trend here. The trend is already bullish. So this is a 4-hour time frame. The trend is bullish. So this is the information we are going to be using, unless maybe we are looking for some levels that the market might go back to. That's where we can use some of the information on the left. But for now, we are only focusing on buys. The trend is up. So we use the 4-hour to mark out our levels. So that's what we use the 4-hour for. Determine the trend is up. You can draw your trend line something like this from the 4-hour time frame, something like this. Want to account for as many weak rejection as possible. So you can see the trend is up, and if you want to trade this, remember you're only going to be focusing on buys. So here's another level you can plot out on your 4-hour time frame. This is the level that price was holding, and so I finally had the break. Price was trading below the level for some time, and we finally had the break of that level by this candle here, by this bullish candle. So you want to plot out your level on the 4-hour time frame. So the next time frame you need is the 1-hour time frame. The first time frame is the 4-hour to draw out your levels. Then you use the 1-hour to see the behavior of the candle or price. That's what we use the 1-hour for. So we'll scale down to the 1-hour time frame. So this is the level we have drawn. So this is the level we have drawn from the 4-hour time frame. Remember, this is a candle that broke that level. So the behavior now is price broke that level and price is pulling back. This bearish candle is the pullback, but we don't know if the pullback, this is just a pullback, but we expect a deep pullback. We expect price to come back to this level, the level it has broken, before we can get a continuation. Because what happens here, if we just take a buy, even though the trend is bullish, price might decide to have a deep pullback and stop us out. So your safest trade will be at the pullback or retest area, unless if you are taking a buy, your stop loss will be below this level. If you are comfortable with that, that's okay, but you should wait for price to always come back to your pullback area or retest area to take your buys. So we use the 1 hour to see the behavior of the candles. So let's say price comes back to the level. That's when we are going to start planning on getting into our trade. We are going to use the 15 minutes time frame for our entries. So we use the 4-hour to mark out our levels and trend line. We mark out our support and resistance. The 1 hour to see the behavior of the candles or price at the area. Then we scale down to the 15 minutes to look for our entries. So here on the 15 minutes, this when we look for our entries, and as you can see, price broke, pull back, and we expect a deep pullback to some of this level so that we can have a smaller stop loss below the level. So currently we are having a pin bar, so we still expect price to pull back to the area. So this our entry time frame. All we are waiting for is for price to come back to this level and show a sign of trailing to break the level through multiple week rejection, 2 or 3 week rejection. We can take an instant buy or set a buy stop above some of the candle that will be formed, and our safest stop loss will be below the level. So that's how we use the 3 time frame for our analysis. First time frame to mark out our levels and trend line, which is the 4-hour time frame. Then the 1 hour to see the behavior of the candles at that level and plan our trades. Then the 15 minutes is for our entry. So that's the 3 time frame you need to make your analysis and take your trades. Never take your trades on the 1 hour or 4-hour time frame. Always try to scale down to get early entries. You can also use the 5 minutes, but I think the 15 minutes is not too fast or slow, so it's just in the middle. So I think it's the best, but you can also scale 5 minutes to get earlier entries. So that's the 3 time frame you need. So I hope the video was helpful. If you gain any value, subscribe to the channel, give us a thumbs up, and if you have any question, drop it in the comment section. See you next time.